Good morning. Today is Thursday and the date is March the 9th. Time right now, Singapore is 12 minutes to 11 in the morning. And we have seen a relatively quiet Wall Street overnight because the market was basically bracing itself for its upcoming, which is tomorrow, non-farm payroll. Yesterday, we also have a continuation of the Fed Chairman Powell testimony in front of Congress for the second day. And there's no new language being used other than what he has revealed, which is a hawkish view on Tuesday, which affected most market across the board. And overnight, we can see it's relatively quiet when you compare to what happens on Tuesday. So overnight on the Wall Street side, we can see that the Dow Jones Industrial Average has a slightly low relative to Tuesday, but it managed to actually did not collapse like what we see on Tuesday. So the market have a new low relative to Tuesday at 32,612, and the market right now does looks like it can go either way, but the risk to the downside obviously is very much present. If the market continues to slide, we can see that from the high of 34,712, this market unfolds in a three-wave more or less structure, and if this continues, likely to be the catalyst will be the non-farm payroll. Market has the possibility of actually dipping into 31,700 to 32,200 levels. So between this 500 point range, there's a possibility market may find a temporary low, technically speaking. But if the market accelerates to the downside, obviously we will have to relook at the possibility. Now, if the market can actually hold out at between 31,700 to 32,200, the market may use this as a base to propel higher, because we have already seen what looks like a potential five-wave pattern here, and this entire move here from 34,712 to whatever the low is going to look like very much like a fourth wave pullback. If that's the case, then the market should have another high beyond 34,712. So technically, we have two possibilities here. Market continues to unfold in a four-wave corrective pattern all the way to 31,700 to 32,200, and then use it as a base to propel higher to 36,240. That could complete what I would consider is a very neat five-wave rally from the low of 28,660. So there are two possibilities here, okay? But first, I think the market buyer is to the downside, coming into the going into the non-farm payroll. And over in the S&P 500, the structure does looks a little bit incomplete to me. It doesn't look symmetrical. If the rebound from 3,491 is going to complete its entire course, it should actually target the 4,370 to 4,500 levels. So this bracket of prices remains still my ultimate target, although in the immediate front, we can see that the market pulls back from 4,195 all the way. Maybe it doesn't look complete. It may have a very simple three wave, but that could be part of a larger degree three wave. They may actually target 3,750 to 3,810. So this bracket of prices remains technically a target area for the near term. And if the market can actually find some kind of support around here, it could use this to propel higher to finish the entire three-wave rally to 4,370. So that would be the ideal outcome. Over in the Nasdaq, we can see Nasdaq looks symmetrical. The rise from 10,440 does looks like equal distance at 12,881. But the pullback from here so far is three-wave corrective pattern, but like very similar to S&P 500. This could be part of a larger degree three-wave decline all the way to 11,170 to 11,400 levels. So it does look like there is a possibility we may see another set of three wave to complete a double tree before the market finds some kind of base here. Okay, so where it goes from here is anybody's guess, because of the rebound from the last year low, last October low looks very complete to me. Okay, very different structure relative to the Dow Jones, and definitely very different looking to the S&P 500. Over in Asia, we can see that the Nikkei 225 continue to charge higher, and this is the highest it has ever traded this year at 28,734.8 this morning, and we are only in the first half of the session for today. At this rate, the market is going, it has already hit into a pocket of prices, which make it very vulnerable right now to selling interest re-emerging. And that bracket of prices can range anywhere from 28,500 all the way to 29,700. So these are very, very broad range. But in between, you can see there's a confluence of prices here, which is centered around 29,200. So if we use this as a target, we need to say 29,200 thereabout as a target, then whatever that market is currently trading at, there is very little upside left. So be very careful chasing this market ever higher. The market right now is in the bracket of prices that is making it very vulnerable for a pullback. Okay, so be very careful chasing the Nikkei ever higher. Now over at Hong Kong, we can see the prices has become a little bit muted after the gap down yesterday in reaction to Wall Street Tuesday's sell-off. So we can see that there is no interest in buying up this market at this present moment in time. Now we have what looks like a three-way pullback here, but very much like what we saw in the S&P 500 and the Nasdaq 100. This could be part of a larger degree three-way, and if this is the case, the market has a possibility to actually go all the way to test the 17,400 to even the 18,000 levels. So in between, we can see there's a bit of a conference between the pullback here. If the market ever comes anywhere near 18,600 or even 17,700, the market would have pulled back anywhere between 50% to 61.8% from the rise of 14,600. So you can see that this overlap of prices here, which is about 17,700 to 1,800 and thereabout. Okay, we can see that this bracket of prices has a highest possibility of finding a bottom. So watch out for this for continued weakness into this bracket of prices. Over in the CSI 300, which is the Chinese index, a main Chinese index, we can see that the prices has been struggling lower. So this looks like a very corrective pullback here from a high of 4,267.6. And if this continues, the market may actually grind all the way down to 4,000 and perhaps find a base here. This morning, we have the release of the Chinese CPI number. It came in a lot better than market expected. So this is definitely a shot in the arm, meaning to say that as far as China's CPIs are concerned, it is not as bad. We are beginning to see some kind of pullback in prices as far as China is concerned. So that should leave it a lot of room to maneuver in terms of the monetary policy that it may adopt. Okay, so basically right now we see that this is actually very constructive for the Chinese equity markets going forward. Okay. Over in commodity, we can see energy prices continue to weaken on the face of a resurgent dollar. Now, on Tuesday, what the Fed chairman said was basically he says that there is a very high possibility that interest rate will continue to stay high and for much higher than market expected. So the market actually take it as a very hawkish remark by the Fed chairman, and the dollar surges as a result. So we can see that when dollar surges, commodity prices tends to suffer, and that applies to energy prices when you see crude oil prices actually slam down from a high of $80.90 all the way to $77 on Tuesday. And then yesterday morning, it went down a little bit more to $76.16. And that actually took me out of my long position in crude oil, although I do not suffer losses, but it was quite a disappointment because just before Tuesday, it was looking like it will probably challenge $82, which was my initial target, and then possibly hit to $84.70. So anyway, this is what the market does. And by and large, you can see that there is very little opportunity going forward because the crude oil prices has been actually consolidating for quite some time now. So this consolidation may last a bit more. So in the meantime, maybe I will put my money somewhere else to see if I can get a better return somewhere else and not look at crude oil for a time being. Okay. Over in natural gas, we can see that the pullback on Tuesday, which affected the crude oil prices, did not quite impact the natural gas markets. You can see that the pullback was very, very shallow, and I'm really long the natural gas market. There is a possibility because this one looks like this rally here may actually unfold in a three wave, which targets $3.56, which is my target for this move here. So I'm taking a little bit where I can. I've been trying to buy natural gas for quite some time. The last time I did it, it wasn't successful. Market continued to dip, but I think the market may have already found a bottom. So this bottom here could actually ignite a substantial rebound in natural gas prices. Now remember, natural gas was trading above $10, and now it went down to $2. So we have seen an 80% decline in natural gas prices, and the market is seriously oversold. And even at current prices, it will definitely look very attractive to trade the counter trend. So this is what I'm doing right now. So over in the gold market itself, you can see the prices very much like what we saw in crude oil. A strong dollar is definitely bad news for precious metal as well. So we can see gold was trading relatively firm at $1,864.40. And good thing was, just before the market went into a new high at 1,864, I actually unloaded all my long position, which I held for quite some time. So I come out alive of this trade, actually make a lot of money from that. And the market slammed down at the point in time. At the current point in time, I don't believe the market has found a bottom yet, but it could well be, because from the high of 1,975, we can say the market pulls back in a three-way corrective pattern. But the timing was, I think there is still a little bit more downside to be seen, okay? Because I've always maintained that precious metal markets, based on cycle, may not actually bottom until somewhere towards the end of April or beginning of May. So we have a month and a half for this thing to work its way down a lot more than where it is currently trading. So for time being, I'm not going to sell precious metal, because I have been very bullish on metals for quite some time, and I think the metal is going to stay bullish in the months ahead. So I definitely not going to be selling if I'm not already sold. This is a lousy price to be selling, so I will be patiently watching for a bottom in precious metals and try to go long when the time is right. So over in silver market, we can see that the slide in precious metals is very obviously not over yet. Silver prices continue to slide. On Tuesday, we see a 4% move in silver, which is quite drastic by comparison. This morning, it actually, last night it went below $20 per ounce to a trade as low at $19.95, and I don't think we have hit the bottom yet. The bottom could very well be somewhere near the $19 price levels, because there is a confluence of Fibonacci numbers here, and maybe this will be the area in which it will find temporary bottom. Okay, over in dollar, we can find that the dollar continues to charge higher. Yesterday we have a new high in the dollar index at 105.87, and I think this is just the beginning, because after the decline from last year, September, end of September, you can see that the dollar actually come off quite a fair bit and actually turned the dollar actually negative in the bear market as far as the daily time frame is concerned. So right now we can see that there is an initial push from 168. So far the high is 105.87. Any pullback here will likely be a three-wave to be completed by another three-wave rally. So I have a target here at 108 in the dollar index. Let's see whether the market will actually work out that way or not. So if the dollar stays strong, the other currency will have to pull back, and this is what we see in the major currencies. You can see euro dollar from a high of just under 107 now push back to 105.5, and it may continue to go lower. We have a three-way pullback here so far, and it may actually extend a bit lower. Target here for time being in the near term is 104.30 at least, maybe even go down to 103.30. Okay, so we have to watch this price bracket. The market can actually find some kind of technical support here, and we have buyers coming in from this area, the market may have a chance to actually stabilize. But for now, I think the market is biased to the downside, so be very careful about staying long in the currencies. Over in sterling, we can see the market has been consolidating prior to Tuesday's meltdown. Market has been consolidating very well for 2 weeks and more, and then before it sold off on Tuesday, and this looks like it may actually extend. But we are getting very close to a chart point here. Based on the three-way pullback, the equality level is at 118. Sorry, 1.18 thereabout. The low so far last night was 1.1802, which is close to 1.18. Okay, so right now we are getting very close to this technical chart point here. It may or may not hold, but if it is a three-wave, then it may actually hold, because so far we have seen a 5-wave rally. So this could be part of a 4th wave pullback before the market actually pulls higher. So we will have to see how things unfold here. Technically, this is a lousy price to be selling sterling right now. If you have any short here, watch out for a violent reversal, especially on the back of tomorrow's non-farm payroll. Okay, that could be the catalyst. catalyst going forward. Over in Aussie, we can say Aussie actually sold off quite badly on Tuesday, but it's somehow stabilized yesterday night. The low traded is 0.6570, and we can find that this morning there's a bit of stabilization. Again, it is very near the chart point, and the chart point here is at 0.6540. We could see a bit of a rebound, but by and large, I think the market for the time being is going to be kept somewhere near the most recent high here at 0.6780. Okay, so watch out for the inability to cross beyond this level. We may be seeing a three-way pullback here before the market extend lower. Okay. Over in dollar yen, we can see that the dollar continue to charge higher, but we are getting very, very close to a critical chart point here. The high last night was 137.91, and this morning there was no further upside. Okay, we can see that this market is pulling up very neatly in the potential 5-wave rally. So all we need now is the market to pull back momentarily in a 4th-wave pullback, and then market may make another high towards 139.60 or even 142 half. My target originally for a round number is 139. So this has always been my target. So if that is the case, if the market pulls back before it goes up to a new high, then it would have completed a very neat 5-wave rally. And what we need then will be a more sizable pullback in the 3-wave pattern before the market go up and challenge 151.94. Okay, over the next few months, we may see dollar continue to edge higher. Over in dollar CAD, we can see dollar CAD remains very, very bullish. After initially maintaining a very consolidated pattern, the market actually kicked off on Tuesday and maintained even higher prices yesterday, and this morning we can see that this dollar strength remains very visible even in Asia trading hours. But the market right now is in a very vulnerable price range because we have a 3-wave rally here. Market is well within this bracket of 137.40 to 138.5. So this is an area in which it's become very vulnerable for a market to pull back. So if you are not already long dollar CAD, no, do not go in and buy at this current level. I definitely would not be looking at buying the dollar at this current level. Okay, do watch out for a pullback here. Over in cryptocurrencies, we see a little bit of a pullback last night in Bitcoin, but not drastic enough. The market actually went down to as low as $21,590 on very low volume. So this is what I would consider a 4th-wave pullback. You can see a very neat 1, 2, 3, 4, 5 rally, and this is followed by a 3-wave pullback. This is classic Elliott wave pattern, and if this is the case, now there is every possibility the market may actually hold at 20,900 to 21,500 levels. Now this is a place bracket of prices which I think will most likely attract buying interest, and if the market can actually hold and not accelerate below 20,900, there's every possibility that we can see a new high going forward. So we will have to let the market tell us. Now I've already placed order to buy, okay, near the 21,500 levels. Hopefully that is the case and the market can actually stabilize. Okay, but by and large, I think this is a great setup looking. Okay, over in Ethereum, the same thing that we saw in Bitcoin is also replicated in the Ethereum market. We have a 5-wave rally, follow what looks like possibly a 4th-wave pullback in a classic 3-wave pattern, and if the market can hold at $1,494 or even to as low as $1,450, this will be a fantastic area to pick up some Ethereum for the possibility for the market to actually come even higher by the entire range of 1,600 about maybe $160. Yeah, so this it's about $650. So there's a possibility from here onwards the market have a $600 potential. It means an equal distance. Okay, entire length of this, extrapolate from the low, whatever the low is, that will be the target for the next move. So it has a lot of upside potential. Do watch out. So in the meantime, this is all I have for you, and until tomorrow, non-farm payroll, stay safe. This is bye for now. Bye bye.